So here it is, it's new stock day. Today I'm going to reveal the new stock that I bought into the portfolio, and I have mentioned it on the YouTube channel before actually, so it should not be too much of a surprise. But yeah, this is a new stock that I bought into the US portfolio, with me selling a few of my stocks recently, especially on the US side of it. I think we had like Celsius, we sold, obviously we covered Tesla, Lovesac. There's been a few stocks that have come out of my portfolio, so that's created a bit of room to go buy some, and I bought this US stock, and I bought 3 UK stocks as well, which I'll talk about them 3 UK stocks in a little bit. But today I'm going to talk about the US one that I added into the portfolio, so we'll go through this together. Now, as always, if you want to know what I'm buying and selling in real time, the place to be is on the Patreon. Obviously you guys on the Patreon know I bought this stock I think around 2, maybe 3 weeks ago, so it's not a shock for you guys. But for you guys on YouTube, this is the first time obviously I've opened up that I've bought this stock, and it's a turnaround play. So the aim is that I'm looking at this company thinking, the company in my opinion has been mismanaged in the last few years, and they've had a new CEO coming in, and I feel like the CEO can turn it around, and the share price and financial performance will improve from where it has done previously. And as well as that, it's also a very good dividend player, so I feel like I'm going to get a lot of good share price appreciation, somewhere between 50 to 100%, and as well as doing that, I feel like I'm going to collect a 5 to 6% dividend yield. So the stock is Walgreens, and you can see here Walgreens ticker WBA is currently $35, and I do feel like this stock will get somewhere between $50 to potentially up to $70, and that'll be my target range for the stock. Now, it currently doesn't say it has a P ratio, just because it has slightly dropped out of profitability at the moment with a few acquisitions, but it's roughly going to be trading around 10 times earnings by the end of the year, which isn't too bad, I think, as well. And it currently pays a 5.4% dividend yield. Now, I did buy my original buy somewhere around $35. For me personally, I would like to be buying this stock somewhere in the below the $35 range. If I can get closer to 33, maybe 32, that would be ideally where I'd buy more shares of Walgreens. That's my target price. And the thing is, with that target price as well, that's where it would actually lift the dividend yield up to 6%, which is even more attractive. And going forward, as well as having the share price appreciation, I think this stock as well could offer a stock that keeps upping up that dividend in the future. So when the stock starts, or the business starts performing a lot better, I think I'll get that share price appreciation, and the dividend yield for me will move more towards a 7, 8, even 9% dividend yield. And obviously that would be amazing, because that would be close to what the average return is in the S&P 500. Now, Walgreens itself, like I said, in my opinion, has been a bit of a mismanaged company. It hasn't been to the maximum potential it could be, and that's clear when you look at Walgreens over the last 5 years. 2018 was $63, and even before the whole crash, the stock would have been down 15%. Obviously, the 2022 stock market crash has taken it even a little bit lower. Compare that to one of its rivals, like CVS Health. If you take out the 2022 stock market crash that we've had, and obviously that's killed a lot of stocks out there, the stock from 5 years ago would have been $65 and all the way up to $101. So you would have had a good share price performance from this stock, as well as collecting a very good dividend yield as well. So you can see here that Walgreens hasn't performed as good as what a similar company, CVS, has performed, and it needs to adapt a little bit more like what CVS has done. So yeah, I covered this one I think a few weeks ago. I called it I might buy this stock 1 month ago, and I did go buy this stock. I told you whenever I put I might buy this stock, there's a good 50% that I do go buy it, and it has happened. So why has Walgreens struggled? Well, Walgreens has struggled for many reasons. One of them is the growth of Amazon Pharmacy. So Amazon obviously came to this area, everyone uses Amazon. Oh, you know what, we'll go on Amazon now to use it as our pharmacy. The deliveries are very quick, we don't have to go to the stores, and the competition has killed them, especially online competition in the last 5 years. There's been a few things as well that has affected Walgreens where they haven't done so well. The rising costs, for example, wages, inflation, managing costs in general hasn't been good. Now, they did have a little bit of a bump up because of the CV boom, but obviously the CV boom isn't going to last forever, and it's how can they adapt after the CV boom going forward, and how do they adapt to this competition and the cost cutting? Well, so they brought in a new CEO, and they brought in Roz Brewer, who, without her history on top of my list here, I know she used to work at Starbucks as well as plenty of other companies, so she has plenty of experience, and it looks like she's already, since she came in March in 2021, since 2021 it looks like she's already making some really good decisions in the last 2 years that she's been inside the business. one thing she's doing is trying to manage the costs, making the stores more efficient, closing down stores that potentially don't need to be there, and also making sure that any parts of the business that are pretty pointless for the company holding, any little parts she's been selling off also to strengthen up the balance sheet as well. And that's the key thing for Walgreens. This is why it has been a stock that hasn't performed that well previously, is because financially the revenue growth has actually been good, but it's not been able to actually grow its earnings. When you look at its earnings or its net income, the net income has really struggled to grow in the last few years, especially since 2016, 2015. So it needs to improve its net income. And the evidence of that starting to happen is clear in the recent earnings. One thing that I was waiting for to buy this company was a new update from the company, which we got on the 28th of March, which was actually the day I believe I pulled the trigger and started buying this stock, and this is when it brought out its recent earnings. And you'll be able to see in the recent earnings that EPS was strong, it was a good beat, revenue grew 7.6% year over year, which once again was a really good beat as well. The big thing was the EPS. The EPS was raised through the year and is higher than consensus. So you can see here the EPS guidance was for $4.45 to $4.65 versus the consensus of 5.50, and this comes over the hard comps from the CV19 demand as well, which is obviously really good. Also, they saw one of the big acquisitions that they're making, VillageMD, be very strong as well. We'll talk about that in a little bit going forward. So how is the company now generating into a good direction? How is the turnaround starting to happen? Well, first of all, it's starting to use its physical locations a lot better. So obviously the physical pharmacy locations are still going to do very well, and it's more just about managing the demand. They're not going to offer good revenue growth, but make sure you're getting the most efficiency out of them locations. And then how do you combat the threat with online? Well, first of all, you offer pickup. Okay, people might not want to go out of the house to pick things up, but when you can wait either 24 hours for, let's say, Amazon delivery, or you can go pick something up, and Walgreens, I think, everyone has a Walgreens within roughly around about a 3-mile radius in America, so it's not too far for people to go to, and you offer a 30-minute pickup. So people, obviously, when you're ill, you want something very fast to kind of combat with that issue, or if you need something, you want to probably get it fast when it's a medical issue. So 30 minutes pickup is very competitive to the Amazon threat, where you might not want to go out of the house, but when you can get something in 30 minutes compared to 24 hours, it just gives people that incentive to go, you know what, I'll actually go pick something up from Walgreens. Or if you do think, actually, you know what, I don't want to still go out, then they actually now offer 1-hour delivery service, which is obviously as well very competitive with the likes of Amazon. So this is one thing they've been able to do, is use the stores more efficiently and also offer 1-hour delivery a lot quicker. Now, the other thing that they've done is they've acquired VillageMD. Now, VillageMD is the growth driver in the business going forward. VillageMD is a clinic healthcare that is affordable for people that are in the US, and we know what the healthcare issue is like in the US at the moment. And what Walgreens have been able to do is start adding these healthcare clinics onto the side of Walgreens. So you imagine, okay, I need to go get an appointment, okay, go into the VillageMD, go in there, oh, you need to go get so-and-so, oh, where can I go get that from? Oh, I go to Walgreens next door, I go to Walgreens, I go buy something from there, or I might get something else that I need from Walgreens. It all ties in very well to the business model. And this is Walgreens pivoting from where they've been previously to starting to adapt to the competition and maximize the potential here. And these two, in my opinion, tie very nicely with each other, where they'll start generating sales. So the combination of being more efficient with the stores that they have, selling off parts that they don't need in the business, offering more curbside pickup, deliveries being more competitive, and also the addition now of VillageMD means that Walgreens is now pivoting into a very competitive business where it hasn't been that for the last 5 years, and that's why it's being killed on a revenue basis, and the margins have been hit, the competition's hit them. They're actually now using the benefits they have of having physical location to move into a very competitive space. Now, like I said, that has been clear on the financials, but going forward, we should see now Walgreens at the end of 2024 putting 3.2 billion in profit. That once again puts it below 10 times earnings, which I think is really attractive. And we should see good amounts of revenue growth moving forward, a lot of that driven by the Village MD acquisition. So we're going to have some good amounts of good revenue growth. We should see profit being driven forward, which has been clear in the recent earnings and the recent guidance. And when you look at the valuation of what it's going to be at, and if you add in 3-4% revenue growth a year, you also have profit starting to be driven up. This looks very cheap as well. Combine that with the balance sheet has starting to get strengthened up a little bit in the last 2 years. So you can see here the debt went from 68% debt to equity. It's now sitting at 44% debt to equity, which is a lot better situation. You combine that with, I believe it's actually a dividend king, but a company that has a very good track record of that dividend payout and continuing to pay that dividend going forward, and that should also increase. And you think, well, we've had a new management team. Are they confident in delivering the business plan and the turnaround going forward? Well, the positive thing is the CEO that we just talked about, which is Ros Brewer. What did she go do? Well, after I actually bought the stock, the day after I bought the stock, she then on the 29th of March went and picked up quite a few shares inside the business. And you can see here she bought $330,000 worth of shares inside the business, or 10,000 shares in the business as well. So clearly she's looking like she's doing a very good job. And then to top it off, she gives you the confidence of going, you know what, I'm actually confident that I'm turning it around. I'm going to back my own turnaround plan here. I'm actually going to put in $350,000 worth of my own money into the company and buy some shares in the business. I love that as well. That as a shareholder does give you really good confidence to go buy some more shares as well. So yeah, I think her price was $33.95. So yeah, I did buy some more shares in Walgreens. It's a bit of a turnaround play, a bit of a dividend plan as well. And like I said, for me, I don't mind it at $35, but if I can get it to more like $33, $32, that's where I definitely like this stock. So yeah, I did buy some more Walgreens. So I hope you enjoyed the video anyway, guys. Let me know if you're a fan of Walgreens, if you buy some shares, or if for you, it's one to not buy at the moment. And as always, hope you enjoyed the video. Smash that like button. And yeah, I'll catch you in a bit.